Take a look at this chart. It shows us what happens when a currency collapses. Between 2015 and 2025, the Turkish lira fell by 94% against the US dollar. In Argentina, the story is even more extreme. The peso crashed by 99% relative to the US dollar. The Turkish and Argentinian populations lost all of their purchasing power by holding their local currencies. Bitcoin, however, acted like a life raft. This is what Bitcoin's chart looks like priced in lira. It rose 650,000% since 2015. And this is what it looks like in pesos. It rose by over 5 million%. Now, what if I told you that the US dollar currency was also facing significant risks today? In just the past 100 days, the US dollar index has fallen by more than 8%. Since Bitcoin was born in 2009, this kind of move on the US dollar has only happened 5 times. But unlike past declines, this recent drop in the dollar feels different and potentially more serious. It's not just another short-term correction or reaction to temporary market noise. This time, it's happening alongside deeper structural concerns, like rising debt, geopolitical tensions, and growing distrust in the US financial system. In a world where the dollar loses its dominance, Bitcoin could take on an entirely new role. Now, unless you've been off the grid, you might already have some idea of why this US dollar decline is different. And Trump is back in the spotlight, and he's made it very clear that he wants a weaker dollar.
He wants to crash the dollar.
Whether through tariffs, trade threats, or currency pressure, weakening the dollar has become a core part of his playbook. Now, you might be wondering why Trump would want a weaker dollar. Well, in Trump's playbook, a strong dollar may sound patriotic, but a weaker one wins trade wars. A weaker dollar makes U.S. exports more competitive, boosts manufacturing, and fits perfectly with his America First agenda. It's a strategy aimed at bringing back jobs to America, reducing trade deficits, and pressuring U.S. companies to produce at home instead of relying on global supply chains. And if Trump gets his way, the dollar weakness could become a long-term theme. Now here's what's really concerning if the dollar weakness actually persists in the long term. When the world's largest economy deliberately weakens its currency, it sends a message that the US dollar may no longer be the unshakable pillar it once was. And that loss of confidence is already starting to show. According to the International Monetary Fund, or the IMF for short, the dollar's share of global foreign exchange reserves has dropped from 66% in 2016 to just 57% today. That's not just a data point. It's a signal that central banks around the world are slowly diversifying away from the dollar. Part of the concern is the massive amount of US debt that's being accumulated. As of March 2025, US government debt has surged past $35 trillion. That's more than the combined national debts of Germany, Japan, the UK, and Canada. This isn't just a number, it's a major warning signal, because the strength of the US dollar is ultimately built on confidence, and that confidence depends on the belief that the US government can remain solvent. But as the US debt continues to climb rapidly, that confidence is now starting to come into question. We saw something similar happen with the British pound in the 1900s, which lost its global reserve status after World War II as the UK's debt levels exploded. By the late 1950s, the financial burden of war, money printing, and America's rising dominance led to a collapse in global confidence in the pound. We can see that in this chart showing the pound's share of global foreign exchange reserves, which fell sharply from around 80% in 1947. And continued to decline steadily in the years that followed. At the same time, the US dollar was gaining global recognition, slowly taking over international trade and reserves. By 1954, the US dollar had officially dethroned the British pound as the world's reserve currency. Fast forward to today, and now America is running trillion-dollar deficits, with dollar dominance starting to slip. Now you might be wondering where Bitcoin comes into all of this. Well, that's where the concept of de-dollarization comes in. We won't go too much into detail on it in this video, but in simple terms, de-dollarization is the slow, strategic shift away from the US dollar in global trade, finance, and reserves. While we're not fully there yet, the warning signs are hard to ignore. As the dollar's dominance fades, it creates a vacuum because there's no obvious successor right now. The Chinese yuan and euro both come with their own political risks, capital controls, and trust issues. That's why decentralized storeholds of value, like gold and Bitcoin, are moving to the front of the line. These assets are not controlled by any one country, and in a world where confidence in fiat currencies is breaking down, they're beginning to look like the most viable alternatives. Gold has always played that role, but now Bitcoin is offering a better and more modern alternative. Bitcoin isn't just a passive store of value, it's fast, borderless, not governed by any central bank, not pegged to any government, and trades 24/7 globally without capital controls. To put it in perspective, moving $1 billion worth of gold across borders can take weeks, require armored transport, security teams, and cost millions in logistics. With Bitcoin, that same $1 billion can be transferred from a phone or laptop in under an hour, for a fee of just a few dollars. That's why traders are beginning to treat Bitcoin not just as a risk asset, but as a macro instrument, a way to express views on currency strength and long-term monetary shifts. So, as the dollar weakens and trust in fiat continues to decline, Bitcoin is increasingly being positioned as a long-term destination for capital seeking safety outside the system. And we're already starting to see signs of big capital flowing into Bitcoin. In the last few years, countries like El Salvador and the Central African Republic declared Bitcoin as legal tender, officially recognizing it as a currency. Yes, these are relatively small economies, but the signal is clear. Global confidence in Bitcoin is rising. In fact, even other institutions and governments have been adding Bitcoin to their balance sheet. The UAE's Sovereign Wealth Fund has already accumulated 4,678 Bitcoin, nearly 5% of its portfolio. Wisconsin's pension fund recently disclosed a position of 3,442 Bitcoin, making up around 1% of its total assets. And if that wasn't enough, just 2 months ago, President Trump signed an executive order declaring Bitcoin a strategic reserve asset, providing a lot of credibility for Bitcoin. So what happens if this trend accelerates? Well, gold currently makes up around 2% of total global wealth, with a market cap of roughly $22.3 trillion. Bitcoin, on the other hand, is just at $1.9 trillion right now. If Bitcoin were to just match gold's market cap, the price of a single Bitcoin would soar to around $1.1 million. This goes to show just how much upside there could be if capital rotation into Bitcoin continues at the institutional and sovereign level, a trend we think is very likely to continue. While the long-term trend of de-dollarization is real, we're not calling for an imminent collapse of the US dollar yet. The US still holds massive structural advantages that cannot be ignored. It remains the world's largest economy with a GDP of over $28 trillion and deep capital markets that most of the world still relies on. America leads the industries of the future, from AI to semiconductors, and controls virtually all of the trillion-dollar tech giants: Apple, Microsoft, Amazon, Google, and Nvidia. And it's also the largest public holder of Bitcoin, with over 200,000 coins. So, while the dollar's dominance may gradually fade, it won't vanish overnight. What we're likely witnessing is the early stages of a shift from a single reserve currency world to a more decentralized multi-asset system. And in that transition, Bitcoin has positioned itself as the foundation for a new financial era. By the way, in May 2025, we had some pretty incredible trades on our crypto trading membership. SLOC secured a total profit of 193% on 16 winning trades. If you want access to trade plans, market updates, educational content, and real-time trade alerts from 3 professional traders, join us using the link in the description below.